When you are living and working outside of the U.S., you are still entitled to file your itemized deductions. So that includes all the things that you are often familiar with when you're living and working in the U.S. That includes things like state income taxes or mortgage interest on a principal residence or on a holiday home, also property tax on your principal residence. We can also claim all charitable contributions to U.S. charities, so it's important to keep track of all those through the year. There is an issue that if it's a foreign charity, it may not be deductible. It generally has to be on an authorized list of the IRS in order to be deductible on the U.S. return. You would also be entitled to claim unreimbursed employee business expenses above 2% of adjusted gross income. So it's appropriate to keep track of those. If you have investment-related expenses or legal fees or other things that relate to deriving income, those items are also generally considered an itemized deduction, a miscellaneous itemized deduction subject to the 2% threshold. In addition to that, you may have a variety of other things. You may have a rental property back in the U.S. On which you may have a lot of deductions, so it's important to consider what all those deductions are and maximize the recording and the deducting of all of those items. We have an issue when it's a net loss after all expenses are taken into consideration. Depending on your income level, you may be able to deduct that net loss against other income, although if your income is too high, we're not allowed to deduct that net loss currently, but rather we have to carry that forward to future years. You may have partnership losses, you may have a business, or your spouse may have a business on Schedule C, and that may have various expenses which we can claim as deductions, and often we can then claim the net loss on the business against other income. If there's a partnership flowing through with a net loss, you often would receive a K-1, and we would pick up any of those deductions against other income as well. You may have capital losses on the sale of stocks, and to the extent you have capital losses, you can offset those against capital gains, and you can potentially claim up to $3,000 per year of a capital loss against other income, and then carry any remaining capital loss forward to offset against capital gains in the future. You could also have things like moving expenses often are relevant, particularly in the year of the move, and also in later years you may have storage expenses, and those can be claimed throughout the foreign assignment. You could have things like education expenses for family members that are going to university. Often we can claim a deduction or a credit in regard to those education expenses. You may have things like retirement plan contributions. You may have, say, a contribution to a traditional IRA, and we would generally be able to claim a deduction for that as well. So there's many things to consider. We're happy to explain how it works and make sure that people claim the maximum deductions that they're entitled to and reduce their tax to the lowest possible amount.